Welcome back. Hope you're having a good morning. Well, the markets are indicating we're likely to start off in the red, but plenty of stocks to discuss and help us out with some fundamental analysis. Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning and good to see you, Win. Well, let's talk about big boy ITC. That came out with its set of numbers. Some part of the street believes it's a little bit lower after the run-up of 15-20% odd, though valuations are quite comforting. Your view on the stock?
Good morning, Nigel. Glad to be on the show early morning. So if you look at ITC, yes, results are mostly in line to marginally below expectations. The stock has definitely seen a run-up. But if you look at the overall picture, last few quarters, ITC was kind of outperforming the other FMCG peers. And now the others are catching up in terms of growth. And for ITC, the core business growth is kind of maturing. So I think from here, the view definitely remains positive. There will be definitely more upside to the stock, and we have a positive view and a buy rating. But I think some of the other consumption stocks will now pick up and start outperforming ITC with the rural consumption picking up, with the core your staples doing much better now. And with monsoon being good this year, I think some of the other companies, for example, the levers of the world, the Godrej consumers, these kind of companies would start outperforming ITC from here on.
What about Zomato? I was just going through one of the notes at Motilal Oswal itself, and there's a 300 rupee target price that you guys have on Zomato. So is there still a big upside? I mean, you don't believe that a lot of the good news is in the price already?
Yes, Sonia. So I think Zomato continues to surprise, and what does is the Blinkit business, which kind of keeps showing the growth given the disruptive nature and the evolving business in the quick commerce business. So the gross order value for Blinkit grew 100%, and this is the most important factor driving the DCF-based target price for Zomato. Overall, the food delivery business reported strong numbers. Profitability has now kind of matured, and we expect the margins to continue at these levels. They have so the food delivery business would continue to give a contribution margin of about 7.5%. So we expect Zomato to report a PAT margin of 4% for current year and about 8.7% for FY26. And given that Blinkit offers a once-in-a-generation kind of opportunity to participate in a disruptive industry such as retail, grocery, and e-commerce, we believe there is much more steam and room for upside. Hence, we value it at a target of 300.
Got it. Sid, hi, morning. Pharma, right? I mean, there is Sun, which reported, Ekta was outlining the numbers. It's one of the better performing sectors lately, right? So what is your call? So Sun has reported, I think Divi's will report, Lupin, I think over the weekend. What do you like from that space?
Yeah, Prashant, so I think, yes, Pharma has kind of started showing the growth, A, on the base effect, B, on the improving growth trends in some of the key markets, and also kind of stabilization in the cost prices leading to improvement in margins. Domestic market is the way, so domestic formulation is the key growth driver. And for example, Sun delivered better than growth, expected growth in Q1, led by improved segmental mix and lower raw material costs. We expect Sun Pharma to continue to do well. It is one of our preferred picks and top picks in the pharma space, given the rising contribution from the specialty products, progress on some of the key developments, R&D products. And in generics business now, as I said, the US, European markets kind of showing improvement and growth. So we have a buy rating and a target price of almost 2019-80 is what we value at. And we prefer Sun Pharma in the pharma space.
That I wanted one word from your end on the Ola Electric IPO, because the street is a bit divided on this one. Which side of the fence are you on?
So again, a very difficult question, Sonia. So while we have no official view on Ola, I think the current business and losses and the company's plan to get into even lower cost models could keep the profitability little far away. Having said that, it's a great opportunity to enter into the EV space through a direct OEM, which was so far not available, pure play EV play. So I would remain on the sidelines and would wait for some quarterly results and some business trends to see, and then only take a firm view on what.
Okay, all right. Siddharth, I wanted your view on metals because today, in fact, that set of stocks could pull back a little bit, but we have been seeing on this set as well, since the balance sheets are in far better shape, and a lot of focus on the cost side, all those dips have got bought into. What's your view and what is the preference on the metals pack?
So, Nigel, I think if you see overall, the upcoming rate cut, whenever that happens, would be positive for the overall metal companies. We have seen some improvement in global markets and demand environment from the US markets, and especially for metals, the Chinese markets have kind of seen some improvement. And on back of that, we have seen, despite the results not being that strong, some of the market interest for metals has improved. So what we believe is that overall metals after a high base and then the numbers would now start recovering. Overall, the global outlook seems to be far improving than compared to the 2 quarters back. And within that, what we are expecting is some of the so the non-ferrous side is something that we like. So Hindalco is our preferred pick. And then on the broader metal space, to play the broader metal space, we like the mining company called Coal India. The company came out with very strong results. And that is a good way to play the overall power sector as well as the metal space, because again, as you see globally, a lot of volatility is there, and that could have a direct impact on metal stocks. So the preferred way to play the space is Hindalco, which is on the aluminium side, where the value-added contribution is going up, and Coal India from the mining space.
Okay.